Roku going public, and joining us now is Steve Louden, CFO of Roku. Steve, thanks so much for joining us, and I want to start off with a big congratulations on a very great public debut for your company. Shares up significantly to the tune of about 30% today. I mean, you're over at the NASDAQ, shares soaring when they first opened. I will say, though, Snap and Blue Apron, they also have shown some difficulty in making the transition into the public spotlight, though they were up big on their very first day of trading. Why do you think now was the right time for Roku to go public and that you all will be successful in the public sector?
Yeah, thanks for having me on. First off, it's a great milestone for Roku. It's a great day for streaming overall. I think for us, our business is about growing active accounts, getting folks to stream on the platform, and then monetizing them. And so for us, this has just been a great evolution in the business, and there is a massive opportunity in streaming, and we're the leading streaming platform. So it's a great time for us to access the public markets.
Hey, Steve, Brad Smith here. 80% of your gross profit from the first half of this year going directly into advertising. So when you think of the play for that moving forward, and really the consumer sentiment around advertising, they're moving on to other platforms to avoid that. But what is kind of the driving factor in keeping them coming back to the Roku platform?
Yeah, so 80% of the gross profit in the first half came from our platform segment, which is comprised of advertising and then also content distribution revenue shares. Yeah, a lot of people are moving over to OTT for more choice, but also value. So actually advertising is the fastest growing type of streaming on the platform. Roughly 40% of the streaming hours contain ads. So we actually think that folks are going to come over for a few subscription services on top, but they're also looking for value. And free ad-supported content provides a lot of value for consumers. Free is actually one of the top search terms on Roku.com. So it is a great place to make a trade-off to watch some free content with ads.
Steve, when you think about Roku, I mean, the company at this point typically growing about 6% quarter over quarter. When it comes to your user base, I know that we're talking a lot about whether or not you guys are going to be able to bring in more advertisers, but in order to bring in advertisers, you need to grow your user account. What is the strategy for Roku right now?
Yeah, so we're the leading streaming TV platform. We've got 15 million active users, and those accounts are growing at over 40%. There's three ways that we grow accounts. Traditionally, we've had accounts come from the player segment, but increasingly they're coming from licensed sources where we're licensing our operating system for TVs. So the market share for us in TVs has actually grown significantly since we launched the program a few years ago. In fact, 1 in 5 TVs in the first half of this year were actually running the Roku platform in terms of new sales. So there's a great opportunity for us to continue to grow accounts. 15 million, it gives us great scale, but there's a lot more households in the US and then internationally as well.
So, Steve, you mentioned partnerships with TV platforms, but if we shift 5 years out from now and leverage the VR conversation of this too. We had our own John Steinberg talk with Mark Cuban the other day, and Mark actually said some of his TV consumption actually comes through his VR headset because he's able to sit in bed and put the headset on and watch it from right there. How do you consider VR being a significant play for you guys in the future going forward, allowing some of those platforms to leverage your technology?
Yeah, so right now we're focused on being the operating system that powers all the world's TVs. And data shows that for long-form content, more and more of that is coming to the big screen. People, like the experience of having the big screen for streaming content in their living rooms, and so that's where we're focused. Certainly, the company has evolved over time, and so we'll continue to evolve. But for right now, the dominant form for long-form video content's the big screen TV.
Well, Roku does face several hurdles ahead, especially when you think about increasing competition from the likes of Amazon, along with just the simple willingness of consumers to pay a premium for those ad streaming services. How are you guys going to combat those sort of headwinds?
Yeah, so first I think it's important to recognize it. We've been competing with big competitors for years, so it's not a new phenomenon. And we are the leading streaming platform. We have great partnerships. We have the broadest content, both from a subscription and advertising free advertising content. So, what our goal is to have the most content on the platform and to be a neutral place where people can watch the content that is most relevant to them.
So we've talked a lot about television watching content, but let's shift to the other side of the conversation where there's tremendous upside as well in terms of the esports industry. You guys do have gaming within your platform. How do you anticipate that really growing, especially with some of the capital that you're able to take on now because of the IPO and some of the kind of shift towards that industry in the future as well?
Yeah, now certainly that has been gaining prominence and growing, and for us, really we're about trying to find the most content and onboard that onto the platform. So I think that'll be one of the areas that will continue to grow. I mean, overall streaming hours are growing over 60% on the platform, so there's a lot of growth for all kinds of content.
Let's dig into the losses, though, that Roku has had thus far. You guys lost $42 million in 2016. That's steeper than the $40 million you lost in 2015. What is the play to bring down those losses?
Yeah, so I think it's important to look at that in the context of the size of the business. So the losses have actually been coming down on a percentage of revenue, and especially as a percentage of gross profit. As we continue to mix into the platform business, our gross margins are expanding significantly, and so that is a great trend for us. Most of our operating expenses are related to headcount and specifically engineering capacity, and so that's something we can manage. We think there's a massive opportunity ahead in OTT, and so we've been investing aggressively against that.
And so, Steve, one of the areas that you guys are very proud about is that marketing costs have been able to remain low while growing the business continually. So when you look at how marketing costs need to be factored in going forward, we've seen a lot of public companies who in their first year have kind of struggled with that effort to keep those costs low, considering the competition that Corey brought up earlier. So how do you adjust for that? Do you see that rising as you come into this public foray and really take on some of that competition?
Yeah, and we've had competition from big competitors for a long time now. Our focus has always been on making the best products, and we don't spend much money on marketing. We don't really do any brand marketing, but we focus on winning the product reviews and having the most content. So that's our strategy, and we're focused on continuing to execute against that.
Well, we know that today, obviously a big day for your company. But as you talked about perhaps staving off the headwinds from these big companies, what does Roku at this point see as the future for this streaming TV service?
Yeah, for us it's about continuing to grow active accounts, getting folks to stream on the platform, and then monetizing. I think a couple huge growth vectors are continuing growth in the Roku TV business. We're now up to 1 in 5 smart TVs in terms of the sales from the first half of the year. That's a great place for us to continue to grow. And then on the platform side, advertising is the biggest component of that, and that is a massive opportunity as the $70 billion starts to move on to streaming from traditional TV advertising.
All right, Steve Louden, thanks so much for joining us, and congratulations again. Right now, shares up nearly 30% on your first day as a public company.
All right, thanks for having me.
That's Steve Louden, CFO of Roku.
All right, and